What's going on, guys? It's GBP, baby. Welcome back to another weekly review. I hope everybody's had a good weekend, and let's get straight into things. So we're going to start on the dollar, and I am actually starting on the monthly this time, just because I think it's important that we get an idea of where we are, especially with us coming to bringing the month to a close soon. So you can see here's the month of February, and I do still have my eyes set on this bearish order block here for price to draw up towards. So I'm going to keep that marked out, as I do believe price may still want to seek to trade to that. And if we go down to the weekly, you'll see how we've wicked nicely up into this weekly bearish order block last week. But yeah, my bias still remains the same in terms of bullishness. I'm wanting to see a continuation to the upside. So as you can see, that monthly level lines up pretty much with the 50% level of this bearish order block, which is significant because you'll see how that level also lines up with a daily bearish order block as well. So I'm going to get these levels just marked out for us. So we know that this blue level is that monthly level, and then we'll make another level for this, for 50% of this bearish order block on the weekly. And then when we get down to the daily, I'll show you that level as well. So on the weekly, you can see we've traded through this fair value gap. And the whole time I've been bullish on dollar, you've seen how I've used different PD arrays to refer to on the way up, and I'll show you what I mean by that. So if you've been watching my channel for a while, you know that originally I had my eyes set on these relative equal highs right here, and then we traded through that successfully 2 weeks ago. Then I had my eyes set on this fair value gap, and you'll see that last week we traded through that and closed it completely, which is why now my eyes are now set on this next PD array, which is this weekly bearish order block. I want to see can price reach its way up into that. Another thing to take note of is the fact that last week we also did trade below the previous week's low. So here you can see we came down, took out 5th of February's low, and then started to trade higher. So as far as I'm concerned, the fact that we traded lower, taking out these lows, and failed to close in this fair value gap, you see we traded to the 50% level, which is consequent encroachment. The fact that we've done that is showing bullishness on the buy side. And again, it shows that this level is mitigated, meaning that I do not want to see or expect price to need to come back down there again. So that's just something to take note of. And when we drop down to the lower time frames, you'll see how this level corresponds to market structure on the lower time frames. So let's now go down to the daily. And what you'll find again, those two levels, remember the first level is that monthly bearish order block. This second level is that weekly bearish order block, and now we have a daily bearish order block as well. So now we have 3 different time frames, both very high time frames, monthly, weekly and daily, all delineating bearish order blocks. So when price trades up into this level, if it does manage to do so, we expect a big reaction off it and can start potentially looking for potential reversal. But until then, we remain bullish because I believe that is the draw on liquidity. So on the daily, we can now look at this bearish order block low, but you'll see I have these levels delineated already as a target, so that's completely fine. So what you find last week is that we traded down, we closed in this fair value gap right here. I'll just show you this, let's make it orange. And you'll see how we completely closed in this fair value gap and actually closed the week in that fair value gap as well. Yes, we wicked below it, but overall, this fair value gap has now been rebalanced completely. Now with a bullish bias, that means that we should now start looking for these relative equal highs to get targeted and for us to start to trade again into this bearish order block on the daily. So I'm going to get these swing highs marked out as again a draw on liquidity for buy size. And then in terms of the low of the week and on the incoming week, we do have a volume imbalance right here, and you'll see how price has continued to respect this 2 times now. So on the Thursday we traded down to it and respected it, and then on the Friday we've also traded down to it and respected it. So let's now get this just made more clear. So when we drop down to the low time frame, you're going to see how price is trading around this level. Another thing to take note of is this bullish order block right here, this down close candle from Friday the 9th of February. We can look at that as a bullish order block. So as price is, wicking down in and trading around this level, we can expect a reaction, assuming we are bullish. So let's go down now to the 4 hour, and you'll see we have some beautiful relative equal lows that have formed again at that volume imbalance. Furthermore, we have a break level just below this level. We've got a low, a high, a low, and then price is broken up to the upside. So looking at this last up close candle, you can see that lines up perfectly with that volume imbalance. So in terms of the low of the week on dollar, I would like to think that we can trade down into this range, collect our sell stops and see this as the manipulation for the week to then witness a reversal to trade high into the buy side liquidity here with potential to reach up here. that is my overall expectation for next week. And to add into that as well, we do also have a consolidation here, and I'll just drag that right out. And again, you can see how price is treating these levels. So here's a consolidation, and then you can see we expanded outside of the consolidation, and now price is back at that consolidation. This is nothing new. It's very normal and very typical of price to return back to the original consolidation. And when you look at the midpoint, you can see that lines up again with that volume imbalance. So this is what I have my eyes on set on. If price, say, does fail these PD arrays and trades through them, and we start moving lower, and we do lose this low, and I was saying this last week as well, if we lose these lows here and here, if we start to see those get targeted, then my bias will have to change, and I'll have to reassess the charts in general. But overall, I'd like to think that we can see a continued support from this consolidation, and so that we can start to watch us expand higher towards that buy side liquidity. But we don't have any high impact news until Wednesday, where we have FOMC minutes. So that means Monday and Tuesday, I'd like to see the low of the week get made, and I'm expecting not too much price action as well. Now let's look at the 1 hour, and then we'll head over to GBP. Again, relatively equal lows, very nice. A bullish order block here as well. And if you look here, you can even find another breaker. We've got a low, a high, a lower low, and then price is broken out to the upside. So we should look at this last swing high right here. And again, it's very typical for price to return to these levels. So I'd like to think that again, price may want to return back down here, where we could start looking for potential longs on dollar with shorts on the pairs, of course. If this was the case, so if price does come down here and the setup does seem to form, I'd simply put my stop loss below this low, because again, I don't want to see this low get violated, with the expectation for us to run for these highs above here. We've got relatively equal highs here, and again, eventually this buy side liquidity as well. So that's everything on dollar. Hope that makes sense. Let's now head over to GBP. We're going to start on the monthly on GBP as well. And of course, if we are bullish on dollar, we should be bearish on GBP. Now, GBP does have a fair value gap right here on the monthly, and I've had my eyes set on December's low for a while now. So that is a drawn liquidity that I've had. I'd like to see price still continue to work its way towards. It has been doing it in its own way on the weekly, but it's doing it in a very consolidated matter. So you'll see last week we traded higher, taking out the previous week's high, beautiful, and we traded into the range of this wick. This is good price action, and I say that because this is what you call rebalancing. So we've seen an instant rebalance, assuming we are moving lower, and I'll just explain what I mean by that. So once this wick traded back into this wick's range and has left it, we can now expect expansion to the downside, because this area has now been rebalanced. What does that mean? I do not expect price to trade anywhere above these levels for now, until we've seen some kind of sell side liquidity be traded to. So what I'm going to get done now is I'm going to draw out the midpoint of this wick, and this will be the highest threshold I expect price to trade to in the new week. In fact, it would be better if it didn't trade to it at all, but this is going to be the very highest I'd want to see price trade on pound next week. So we'll get that marked out with a dashed line, and that's what you call consequent encroachment. And remember, our drawn liquidity is down into this south side right here. So now let's go down to the daily. Actually, before we do that, another thing, there is a fair value gap right here. And if we drag that through, you'll see we traded through that last week. So what does that mean? This should now act as an inversion fair value gap, as in if price manages to trade back up to it, which it very well can. If price manages to trade up into there, we should see rejection at that level. But what's nice to see is that level also lines up perfectly with the 25% level off the wick. And if you've been watching me, you'll know that I preach how 25% levels are more bearish than, say, when price trades to a 50% level. And you'll see what I mean by that in the week if what I say plays out. But yeah, I'm going to keep this fair value gap marked out, because I'd like to see it provide the resistance price needs to be sent lower. Now let's go to the daily. Again, that weekly midpoint is also this daily midpoint, which is convenient. And then we have that gap that fair value gap I was talking about, which should provide resistance. This level here is a rejection block level. So price, again, is likely going to want to seek into that in order to create the high of the week for us to then start looking for shorts, as we have relatively equal lows starting to form down here as well. But I'm not going to bother, actually we'll get that drawn out thinly as a rejection block level. Now let's go to the 4 hour. And you'll see we've had a slight shift in market structure here. We have a big bearish order block as well. So again, I wouldn't be surprised at all if price traded up, found the resistance it need, and then I'd like to see some kind of reversal to the downside. We'll finish on the hourly on pound. Again, took out buy stops, kind of just consolidating our way up. And we have a breaker here last down close candle before the up move, before we broke lower, high, low, higher high, and then we've broken lower. So this is going to act as a breakout, and this technically is as well. But both of them are at levels which we've already identified. Again, it adds confluence and reason as to why we should trust these levels to start looking for setups. So that's everything on pound. Let's go to euro to finish off. So here we are on euro. Let's start on the monthly. And just like GBP, I am still bearish. Now what you'll find is that euro has actually already traded into a monthly fair value gap and traded out of it recently. So we'll look at that and how that's delivered on the lower time frames. So we'll go to the weekly, and what you'll find is last week we traded right down into that fair value gap and traded away from it. This fair value gap is also lined up with this bullish order block as well. So if euro is to continue lower, it's going to need a lot of work to get through areas such as these. Let's go to the daily, and you'll see again the reaction away from euro. So what you may find, if we are bearish, although we're bearish, euro we may find some SMT divergence in terms of euro may take out this buy side liquidity here, whilst GBP, and I'll show you what I mean, GBP may fail to take out that same swing high. So there's a swing high here and there's a swing high here. Euro may successfully take out that buy side liquidity, whereas GBP may fail and then turn around and trade lower. Whereas euro, if it continues to show the strength it's showing, will trade above that buy side liquidity and then turn around. So that's a completely possible outcome, especially with how close we're moving towards this swing high. And if that's the case, I'd be then looking at filling trading into this inversion fair value gap that we have right here. So this is an inversion fair value gap because we've delivered on the upside and then the downside. So when price trades up to there, we should expect some kind of resistance. So definitely keep an eye on this buy side liquidity and see how price reacts above it. And yeah, on the 1 hour, sorry, you can see again we've got some swing highs here, relative equal highs. So price will likely want to see a high formed above here. But like I said, if we do have this bearish bias, we should always expect some kind of reversal and a potential run for the sell stops here and relative equal lows below here. And if we go to the daily, we can get those lows marked out as well. So we can get Thursday's low marked out. Because remember, price aims for daily PD arrays, so daily highs, lows, etc. So we should have those marked out. Here's sell side liquidity on Thursday. And then when we go to the hourly, you can see that's these relative equal lows down here. So yeah, that's everything on euro. I hope that all makes sense. And don't forget to smash the subscribe button, and I'll catch you in the next one. Peace.